Welcome back to another video. And on this channel, what this is really about is I'm dedicated to finding the best asymmetrical income and wealth creating opportunities. Firstly, for myself, because I think we're in the midst of the greatest wealth transfer in human history. How can we multiply our capital and thus multiply our freedom right now? And this year and way back in 2020, I became very interested in uranium, and I've been pleasantly surprised with the amazing returns that 2020 brought. And I've been starting to have more uranium guests on. Now, today's guest, actually, the way we connected is he sent me his own investment thesis on uranium that he wrote. And this is what you're looking at right now on the screen on page 1, Uranium, an opportunity of a lifetime. And no one's ever done that before. And I was intrigued, and I went through it, and I was like, wow, this is great stuff. And I really appreciate him putting this all together. He also has a great Twitter, and that's Yellow Bull on Twitter. And so it's great to have you on. And why don't you tell everyone, first and foremost, the name that you use most often in English and where in the world you're coming from.
My name is Mart, and I come from the Netherlands. And how I started in uranium is pretty weird, actually. I started investing in March, so I'm a very inexperienced investor, some might say. But I just looked up on YouTube, like, what are some good investments? What should I be looking out for? What are some of the basics I should be getting under my belt? And I ran into this video of a Cameco CEO talking about the importance of nuclear power and uranium and the role it plays. And I got really interested in it. I left it there for like 2 or 3 months until I saw an article about energy fuels. And when I saw that, I just started listening to podcasts. I started reading articles. I started doing my own research, which you're looking at right now. And yeah, I really got into it. And it started as only a small allocation to my portfolio, but the more I looked into it, the more I realized this is indeed an opportunity of a lifetime. This is something that only comes along every few decades. And when it does, you need to take full advantage of it, in my opinion, at least.
Okay, so I want to move through this and some of the interesting points on this, but I want to begin here with page 1 in your own investment thesis, where you declare uranium an opportunity of a lifetime. Why is uranium an opportunity of a lifetime, in your opinion?
A few reasons. We look back, we just had a decade-long bear market, which started after the Fukushima disaster. After that happened, Japan shut down its nuclear reactors. A large portion of global demand was turned off. But there was still supply coming online. I'm sure when you look into the thesis, you will see this as well. Just a few years of underperformance, oversupply, the market wasn't going anywhere, the price kept dropping. Until a few years ago, where the spot price started shifting. I think it was down to in the low 10s to now $30, 34 at beginning of April, if I can recall correctly. And after a long bear market like this, you would say like, it might stay down forever, it might not do anything. But what people fail to understand is that nuclear power is the solution to our climate problems. It's the one thing that is reliable baseload green energy. And that's what we need right now. When the entire world is focused on not killing the planet anymore, and we want to all meet our climate goals by 2050, 2060, it's just a fact that we need nuclear power. And the beautiful part of nuclear power, not only because it's the safest energy source, but it also has only one fuel source. That's uranium. It's literally irreplaceable. They need uranium to stay on. And when you pay billions of dollars to get a nuclear power plant constructed, up and running, you're gonna need the fuel. Otherwise you need to restart that coal plant again, and nobody wants that. So what we have here is a commodity that's just been through a 10-year bear market, a very, very necessary commodity, and it's not getting mined. There is a severe undersupply. Calculations show that this year has seen an undersupply of about 75 million pounds. And we need an incentive price of between $60 and $70. Some say between 50 and 60, but I think it's more on the high spectrum of that. Otherwise, not getting mined, and the lights go out, and we don't want that. So we need a price increase, and we need a doubling of it within the next few years. And with the leverage these few companies that have survived the bear market have on the uranium price, I think we're going to see some violent upswings. And if people want to see what kind of returns they can get, all they need to do is to look at the previous bull market between 2003 and 2007, which saw returns of up to 1,000%, as I'm sure Rick Rule has told you.
So I guess the $1 million question that I have is, and maybe nobody knows, how much longer can these prices stay here if there is this big annual supply gap because of the shutdowns? You know, when I present the uranium thesis to some of my friends, you know, many of them are investors. They're investors in silver or gold or Bitcoin or some other commodities. But like, people just don't buy this thesis. In fact, I met with the CEO of a New York Stock Exchange metals company, really cool guy. And we were at lunch, and he was talking about battery metals and needed for renewable. And I said, well, what about uranium? You know, big successful guy. His company trades for over, I think they're over $10, you know, on stock exchange. So pretty successful guy, pretty in the know. And he said, do not get into that. The price is not going to go higher, and it's not needed anymore. And so that's a common way that I met with is the Russians control the price. It'll never go higher. And, you know, we're in this place where the equities have really taken off. But, you know, besides these little 10 cents moves that, you know, which are kind of funny to me. I mean, it's like so comical. It's like 10 cents, 10 cents.
Great.
And what needs to happen for that to not be 10 cents? I mean, how much longer can this go on? And yeah, how much longer do you think this can go on?
That is the $1 million question. And first of all, I want to say that the fact that he dismissed it so quickly and your friends dismissed it so quickly, usually for me and for you, for contrarian investors, means you're looking in the right place. The moment everybody starts ridiculing you or writing it off before looking into it, usually means you've found something, but you still need to prove it. In such an opaque market, it's very hard to answer that question. There are not exact numbers on it. The best research has been done, in my opinion, by Sachem Cove Partners, by Mike Elkin. And what it shows is that there is an unspecified amount of supply that could be brought onto the market, and that might be the reason the price stayed depressed. But if the market was really so oversupplied, why would the price go up almost 66% to $30? Why wouldn't it just stay below $20 if it was so oversupplied? There's no doubt there is a supply deficit. And one thing most people point to is the spot market. The one thing like, oh, the price of spot market, that's so important. But spot market is mostly just people trading back and forth, small volumes. You've heard it all before. But if all these utilities try to get their supplies off of the spot market, they are going to have to compete with the two biggest producers in the world, Cameco and Kazatomprom. Cameco will just shut down their Saqqara Lake due to COVID, and Kazatomprom who just decided to, well, not cut their production by 20%, but capped their production by 20% below the maximum. I think that's from 71 million pounds is their maximum production, and they are now down to 53. And they have been affected by COVID as well. So they are going to need to restock their supplies. They're going to need to make sure that they have enough uranium to meet contract demands. And if these utilities need to compete with the two biggest producers, I don't think it's going to be pretty. They need long-term contracts. And I have no idea how much supply there is. It could stay this way for another year. But the fact is the price needs to go up. It just does. Otherwise, no new supply will come online. And we're going to have a big, big, big problem by the time 2025 comes around.
Why 2025?
I think 2025 is the time that almost all long-term contracts have run up, at least US contract. I think like 70%-ish. I think I got some statistics, and to put into some context, between 2005 and 2012, around 111% of yearly demand was contracted. Between 2013 and 2020, it was 41%.
Okay. So it's estimated that what percentage of these long-term contracts will come available by 2025?
I thought it was 70% was uncovered by 2025.
So how long? Nobody knows the answer to this question, but I always like to ask my guest questions on when, because it's stuff I'm interested in. You know, I have no problem saying my own ideas. I don't know if they're right, but you can be right about the entire thesis, but just miss dates. But you said a minute ago, 1 year. I mean, so how long do you think that this can go on? Are you expecting a significant move in the spot price this year, or are you expecting the equities to run more in anticipation and we eventually get to this big clusterfuck where, you know, the price is still really low, but then we're running into legitimate supply issues and there's not enough and there's energy problems? Where do you fall?
I think we will see a significant move, if only for the amount of geopolitical support I've seen around the world. We've seen France push back their phase-out date from 2025 to 2035. We've seen the UK favoring nuclear power and small demands. We've seen China bringing on a lot of new reactors. It is estimated that with the amount of new reactors they bring on by 2025, the demand side will have increased by 10 million a year, just from China alone. And
10 million pounds per year?
10 million pounds per year. And that's just from China alone by 2025. And the US now, with that Biden is becoming president, and I think the Senate and the House it's also fallen to the Democrats. Mm-hmm. All right. It means their policies, Biden has tended to favor nuclear power. The fact that they are going to favor nuclear power means a lot of demand stays online, means that they are not going to let these nuclear power plants run out of fuel. We've seen massive blackouts in states like California, which is ridiculous for a state like California to have massive blackouts as if it was a third world country. That can't happen. They won't let it happen.
It's insane. I mean, California's top 15, I think, maybe even top 10 economies in the world. I mean, if you compare it to countries. So, I mean, imagine a top 10 country in the world just having rolling blackouts all the time.
That's ridiculous.
And so let's talk about that subject and what will drive this bull market. Now, on the subject of blackouts and the subject of Democrats, who of course are the Green New Deal folks and, you know, the renewable people. So I've heard many times, especially when presenting, you know, what I'm investing in to people, friends, whatever, other acquaintances, is that it's unneeded. And the second part of that is that it's unneeded because there's better technologies and better renewables. I've heard this from many people, even my own brother, actually, to be honest. So, and he said, just trying to look out for you, and I've heard that a lot. And so let's answer that question of what will drive this bull market, but more specifically, what will drive this bull market in the context of what I asked in regards to there being a long-term place for uranium in the global investment, in the global energy demand. Uranium's rightful place is still going to be there, even with Democrats looking for renewables?
Yeah, it will, in my opinion. Let me answer a second question first, and then we'll get on to what will drive this bull market. I've seen an example of this in the UK as well. And just to put it into some perspective, like if you're not going to have nuclear power and you want to meet this 2050 zero carbon emissions goal, you're going to need one of three things. You're going to need 100 square kilometer wind parks. You're going to need 73,000 square kilometers of biomass production, which is about 3.5 times the entire region of Wales. Or you're going to need twice the size of Greater London in solar panels. I don't know if you've ever been to England, but solar panels don't really tend to have a lot of output there. So they're going to need twice the size of Greater London in solar panels of somebody else's Sahara. That just can't happen. Or the last option, and that's the nuclear power option, 24 2-gigawatt capacity nuclear reactors. Now, you tell me which one sounds more likely.
That's funny. My guess is that the second one is going to be more likely.
I think the nuclear power plant solution is going to be the most likely, especially now with small modular reactor technology being more heavily developed, which should provide, like, if people don't trust big old nuclear power plants anymore, and you were saying like in 10 years, in 15 years, will it still be the future? Yeah, maybe those big nuclear power plants will be the future anymore. Some might get decommissioned, some might not get built anymore, but you're going to have plenty of small modular reactors. And these things are so efficient and so safe that I've read one article, I can't back this up, but I thought I'd share it here. If you build a small modular reactor and you decide to just take all the personnel out and just leave it there running on its own, it will just shut itself down. No meltdown, no Fukushima, Chernobyl, nothing. It will just shut itself down. Now, if that isn't safe.
Yeah, that's, I haven't done an incredible amount of research into that, but from what I've gathered from, people that are researching this like a full-time job, like you are, and like many others are, is that the answer to the Fukushima, I had someone comment on my first uranium interview and tell me basically they hated me and they're going to unfollow me now because, Fukushima and I was basically, some crazy form of a terrorist for investing in this kind of type of thing. And from what I've gathered, the technologies with these newer plants are, otherworldly in comparison to the more primitive ways that these were used. Is that accurate?
That is accurate. Generation 4 nuclear power plants are amongst the safest forms of energy. I've seen some numbers and some of them show them to be even more safe than solar or wind. So people saying like, Fukushima, Chernobyl, those are not valid arguments. Chernobyl was like putting a car on a highway without any brakes or a steering wheel and just seeing how long it can go. And Fukushima, like they built There was some technical mistake. They should have had the backup generator up on the hill instead of in the basement. But they built this thing to withstand massive earthquakes, and they got hit by like the fourth most severe earthquake in Japanese history. It shifted the entire island a few inches. It's ridiculous. And they got hit by a tsunami on top of that. And all that did, of course, environmental damage, and I'm not dismissing it, and of course, bad things happened. The numbers show one person died, and even that's debatable. There was one person who was sent there to measure radiation, and I think he caught lung cancer and died. It's very sad, but like, people talk about this as if thousands of people died because of this reactor, which just isn't true.
So for the most part, what I've heard is people that are upset about I was pretty young when it happened. And I didn't even know what nuclear power was, at all, like quite literally. I'm not just trying to be funny. But the argument I hear most is the effect, on the water and the ocean and the sea life and things like that. And what you're saying is these generational 4 ones, I mean, it's the potential of there being this type of leakage and spillover and other type of waste disasters is not a conversation anymore for 2021 with the updates and new generational technologies and such.
Oh, you can have the conversation, but it will be a very boring and short conversation. But it's of course you can never dismiss it. You can never dismiss these things, radioactivity, things like that. But no, it's safe. It's very, very safe. And people going on about the nuclear waste. Oh, but the nuclear waste. Nuclear waste is the main selling point of nuclear power. And it might sound very weird, but let me put that into some context. With coal and natural gas and oil, you spill the CO2, the bad things. You spill them in the air. You throw them in the air. With solar panels and wind farms, you need to recycle them, which is hard. There are toxic elements in solar panels, and it's hard to recycle them. With wind farms, they're made to withstand hurricanes, so the blades need to be buried. They can be properly recycled, or at least it takes a lot of time. Nuclear waste can be stored easily on site in steel barrels encased by concrete. I think all the nuclear waste ever produced in the United States could fit on a 5 feet or 10 feet deep football field. That's it. It's nuclear waste is like there has never been a person that died because nuclear waste is highly regulated, and there's not a lot of it. There just isn't.
So let me ask you. We'll get back into the more exciting stuff, and the exciting stuff is not only what will drive this bull market, but let's talk about the exciting stuff of the equities and the possibilities of it. And, my job's to get people excited. So let's get excited here. So where do you think the equities market in uranium could go?
Is the moon still a valid answer? I think it is, right? Need to elaborate that. I think uranium is going to be the best performing investment asset from here till 2025, or actually if it takes longer, from here until we see the peak of this investment asset. Why do I think that? Well, from all the reasons I stated at the beginning: decade-long bear market, irreplaceable fuel sources, nuclear power getting more geopolitical support. But also, one thing that's very powerful is we've seen it in cannabis stocks, we've seen it in things like Bitcoin, altcoins, we've seen it in a lot of things. It's just people are looking for the next big thing. They're looking for, how do I get rich quickly? Where do I put my money? How do I get the next 100 bagger so I can quit my job? That's what people are looking for. And with the volatility in a $17 billion total sector market cap, with the amount, I've seen your interviews with Rick Rule, and he's talked about him and other, what he described, these are not my words, fat, old, bald, rich guys who still remember the last bull market and want to profit off of it again. This is potentially hundreds of millions of dollars coming into a sector with a market cap about a third the size of Pinterest. It's well and truly going to be volatility all around. And when it does, and when the spot market goes up, and when these equities follow, or if the equities go first, like we see right now, and the spot price follows, and these people come in, and these hedge funds come in, I think there won't be a retail investor on this earth that is not going to look at these uranium equities and think, man, this is one big opportunity. So I think if you want to get excited, just think about that. I think this market, and this is going to be quite a statement, and a lot of people might disagree with me, but I think this bull market, with the fundamentals it has and the amount of capital, investment capital slushing around right now, I think this bull market could eclipse the last one.
Personally, I think anything that's had an all-time high in the past and it's trending in that way again, no matter what it is, I actually think it should pass its previous all-time highs due strictly to social media, the amount of FOMO in the world, the amount of liquidity in the world. And it's, rarely, because it's like kind of a dumb thing to say because you can't quantify it. It's emotion. And that at the end of the day, that's what drives markets is emotion and psychology. It's not fundamentals. And so personally, I agree with you too. I mean, I'd be happy if it didn't do as well. I mean, if it didn't do as well, it's still going to be an amazing market. Now, you had some interesting things to say about the market cap being 1/3 the size of Pinterest, presently a $17 billion market cap. Which is just from the perspective alone. I mean, I'm a dummy. I'm not a uranium savant, but what I like about uranium is how black and white it is a supply and demand story. So you don't need to be that bright to just objectively look at it. And that's probably what got me intrigued. That's probably what made it not intimidating to me. And so what that means with this $17 billion market cap and 1/3 of Pinterest to me is, oh man, I mean, these stocks could probably perform pretty well. So let's talk a little bit about the stocks, what you expect, the ones you're high on, how you're doing your own personal portfolio allocation, et cetera.
Well, personally, I'm doing great with these investments. I bought a lot before the recent run-up. Of course, it's like you've seen the supply demand fundamentals, and it's just like you want to get positioned. That's a hard question. I think they could do very, very, very well. Like I said, they could be the best performing asset classes in investment.
So you talk a lot about Denison and what you added to them. So you even share, in this portfolio, your top
5. I think it's 5.
Top 5. So let me ask you, how many picks do you have allocation to, and what is your way to play the uranium market? For instance, in silver, I have like 20 picks, and I've been following this model that people have of, which is probably a common thing, but being a dummy like me, I probably didn't even know that, but keeping, reasonable percentage allocations of my total portfolio and going for a wider web because in a bull market, even some of the shittiest stocks might end up being the best ones. And so somebody told me to do that, and I followed that. So I have a pretty wide web in silver. I've tried to follow that a little bit in uranium, but I don't have the time to research all these stocks the same way that I had in silver. But what is your strategy on investing in these companies?
My strategy is a little more conservative than that, which might sound a bit stupid for someone who would put so much time into researching the uranium space and who has so much conviction on it. But I've invested in 5 companies, and you can see them on the screen. 6 actually. I added UR Energy. It's not investment advice, obligatory disclaimer. But I have Chemical Energy Fuels, Denison Mines, UR Energy, and Bannerman Resources. I have not invested in NextGen because I have my reservations about them, which I can, if you want to, I can go into that in a very brief manner.
Yeah, well, let's go into it in a minute. So let me ask you then, in the gold and silver industry, there's a lot of companies, and in uranium, there's not. I mean, there's only like 60 something stocks right now in all of uranium, right?
I think publicly traded and accessible to the main public. I think like 25, 30.
Oh, like, okay. So
might have been more.
In silver and uranium, in silver and gold, there's many, right? And so what happens is people slowly start moving to the bottom feeders in silver and gold. Rick calls them the penny dreadfuls. So now in uranium, even a company like Denison, that is your number one holding, is Denison.
That is my number one holding.
And so let's talk a little bit about this stock, but also just potential, right? So it's a bigger name in the uranium world, and a name most investors know. But a name most investors know in the gold and silver industry, you're probably getting like a 3-bagger on it, a 4-bagger on it, and that's why people go really to these bottom feeders in silver and gold. Where do you expect Denison to go? Why is it you only stuck with 5 companies, and you said you were looking for a more conservative approach? And what do you think the prospects are out of a company like this?
Well, to start with your question on the conservative approach and the company-specific one, I like to know everything I can about one company. I like to read everything. I like to witness every single conference call, whatever it might be, so that I know exactly what I'm invested in. And spending so much time on a thesis and spending so much time on this, with it not being my full-time job, sadly, makes it hard to invest in like 20 companies. I totally get why you do it, because you have high leverage to the silver bull market. I'm invested in silver as well. It's the other half of my portfolio. But in the uranium case, like, I want to be invested in the best of the best. The ones that I know it's gonna be just fine. They're gonna ride this bull market, and even if it takes 2, 3, 4 more years, which I don't think it does, but who knows? It's such an opaque market. I want to hold the best of the best. And in uranium, even the best of the best, apart from Cameco and Kazatomprom, the best of the best are still sub $1 billion market cap, so have plenty of room to run. Which brings me on to Denison, my largest holding. Now, this company is special in its potential. What it has a project, the Wheeler River project. It consists of the Phoenix deposit and the Griffin deposit, and they're trying something new. They're trying the ISR mining method. I'm sure you've heard of it. It's being widely used in the US, in Kazakhstan, and it's basically a lower cost mining of a way of mining. Because you pump fluids, you pump like kind of acid fluids into the ground, and you pump up via different pipes, you pump up the uranium of it, uranium ore. It's overly simplified, but you get what I'm saying.
Right.
And it has never been done in the Athabasca Basin in Canada. But that's what Denison is trying to do. They have this big Phoenix deposit, where they're going to try to implement the ISR mining method with the help of using freeze walls to freeze certain parts of their deposit to install the ISR walls. And if this works, their projections, and I'm not saying they're going to make this and it's always way rosier in the presentations. You know that they try to represent their country the best they can. I don't blame them. Their best, or actually their valuation to what the total price would be, like the all-in sustaining costs, everything. It's not just the cash cost, the all-in sustaining cost, everything on it was $8.90. They could turn a massive profit right now at these prices. They could turn a massive profit at half these prices. And the price needs to go to $60 uranium, $60 per pound. So the potential that is behind this, and they've just finished a study to prove that the freeze wall technology will work. And the study was successful, which is very, very good to see. They've also brought in an expert. I think his name was David Bronkhorst, and he has been working in this space for 35 years. He was an expert at chemical in the same field, and they brought him in to help with the freeze wall technology. And this is just this gives this company incredible leverage and incredible potential as well. To add to that, they have very good backing from the Lundin family, a big name in mining. They have backing from other big investments. Rick Rule called them the Uranium Junior Bellwether. They also hold a 22.5% stake in a state-of-the-art mill, which also processes ore from the mill from Cigar Lake. Well, now it's shut, so it won't, but they have a toll milling agreement in place. And they run UPC, Uranium Participation Corp. So they get a small amount of cash flow from that as well. They have everything. In my view, they have everything you want from a uranium junior.
Good deal. So let's end with exit. So everybody has their own opinions on if and when and how they exit something. I know what a lot of people's are in gold and silver. It's a little bit more straightforward, has to do a little bit, with interest rates. And it's, in my opinion, it seems to be a little bit more quantifiable. What is your opinion on, or what is your plan, rather, I should say, on your exit? And if everything goes according to plan, how have you thought this through?
I've actually read a few things about how the previous bull market came to an end. And there was one funny thing I found. I will just get into the serious part. There was one funny thing I found. Do you know the program CNBC Fast Money?
Yeah, Jim Cramer's, yeah.
Yeah. These guys, they timed the top. They made a program about investing in chemical, investing in uranium, about 2 months before the top. They called the top in a ridiculous manner. They did the same in 2011, 4 days before Fukushima, and I'm not saying anything. It's just terrible luck. Just that 4 days before Fukushima, they also aired a program that uranium was back on a march to the top. And it could be terrible luck, but I just found this to be so weird. But what I wanted to get to, my exit strategy is based mostly on human psychology. When everybody seems to be in this market, when it's featured on shows like CNBC Fast Money, when you're flooded on Twitter and other platforms with uranium posts and people putting rocket emojis next to Denison Mines and Chemical and things like that. That's when your taxi driver or your family members or your friends who are dismissing uranium right now tell you, man, what do I buy? I should buy more. What are you invested in? That's probably when you should start thinking about, maybe I should sell my position, take my profits and run as far away as I can. But apart from that, it's also based purely on where the spot price goes. I'm not selling anything unless a big black swan event happens, like another nuclear disaster or another equity wipe. I'm not selling anything before we reach $60 or $70. When that happens, I'm going to start slowly scaling out, like maybe 10% at a time, 20% at a time. So just to lock in some profits, and by the time we reach that, I think those locking in some profits will already get me my initial capital back. And then just write it out, just see how many people are in this trade, how many people are talking about it. The last time the top was reached, I think it was $134 per pound uranium. Inflation adjusted, it would be like something like 170. And that was because hedge funds came into the market and started buying up physical uranium, so they artificially tightened the market. And that's one thing you can look at as well. Have hedge funds started accumulating uranium? One more thing to look at. How many companies are there in the uranium space? Right now, I think 25, 30. I could be completely wrong about that, but last time I checked it was around 25, 30. At the top of the previous bull market was around 500. Once small companies start entering the market because they bought a little bit of moose patcher somewhere in Utah or somewhere else, and they're trying to advertise it as the next big uranium project, and you have all these people just with flashy presentations like that. Those are kind of the things you need to look out for when you're trying to exit this. But I would highly advise people just to start taking profits once the incentive price is reached, and uranium doesn't need to go any higher. Doesn't mean it's not going to go any higher. It probably does, at least in my view. But when it doesn't need to go any higher, that's when you start taking small profits. But to each their own.
When are we going to get $60 to $70 uranium?
Damn it, Jake. I don't know the answer to that question. But if you want my prediction on it, I think we're going to reach $60 uranium. If hedge funds do not enter the market, because that's the wild card right there, Q1 2023 or Q4 2024, or 2022, sorry. Q4 2022, Q1 2023 will be my guess. Please do not hold that against me if that doesn't happen.
So let's talk about hedge funds, right? Like that's a big question, I mean, if I was a billionaire, I mean, I just don't, even if you didn't care about uranium, I mean, the fact of front running any commodity and cornering the market on it in a way that you don't get assassinated, which is what would happen, if you did it in the silver market,
yeah.
In a non-political, metal, obviously there's a lot of politics, throughout the history of uranium, but you get what I'm saying. But I would think it's a no-brainer. I mean, it's like, what are you guys waiting for? You can borrow money at fucking 0% interest rates, it seems like you'd have to be an idiot not to do it. What have you heard about that? Have hedge funds started, etc.?
I have not heard anything about hedge funds starting, but the hard part with uranium as well is that you can't take physical delivery. Well, you can try, but you might get a visit from Homeland Security, and I don't think you want that. But the people that, like, if hedge funds start to accumulate it, they will store it, or they will sign contracts for it. I've not heard anything about hedge funds entering the market. If they would have, and I wouldn't have heard of it, we would already see a significant increase in spot price, I would think. But as of right now, I think we're some way off that. We're just starting. I've made a little, what do you call that? A little model for myself, like a 6-part model of how I assess this. It's just, I made it into a football stadium thing, like phase 1, building the stadium, phase 2, entering the stadium, phase 3, warm up, phase 4, starting the game, phase 5, end of the game, phase 6, everything comes crashing down. And hedge funds entering the market is like phase 4, everything will move up, phase 5, end of the game, retail investors trying to chase the next big thing, phase 6. Well, like every cyclical commodity, it will come back down. It will always come back down. This is not a 15, 20-year hold. It's cyclical, and you need to play it like that.
So where do you think we are on that model that you said? Tell me about your model.
I think we're entering phase 2, and phase 1 is like the very obscure part. It's nobody's talking about it. Nobody's doing anything. And I think phase 1 was from 2017 to now, and I think we're just now entering phase 2. The loading off from the buses, entering the stadium, which is a smart money, which is the people that have done the work, which is the people that see the potential. And phase 2 might be very early. We might get off the bus, we might take our seats, and the game might not start for another 2 years. But we're there. And that's where I think we're just now entering phase 2.
If the game doesn't start for 2 years, I'm going to throw my computer in my pool.
I'm going to be right there with you, man.
All right, cool. This was good stuff. So everyone be sure to follow Yellow Bull over on Twitter. I'll be sure to put his link in the description. Twitter account that I absolutely love and was super impressed with all of this outlook and all of this investment thesis, and really appreciate you originally sending this to me. I was just super, super impressed with it. When I read it through, I was like, hey man, we totally gotta have you on the channel and talk about it. And I know you were a little nervous about coming on because you had just sent me over the thesis and you hadn't done much. But I really appreciate you coming on, and I really appreciate you sending this to me. And hopefully we have some fun here in 2021.